Hello, everybody. It's your boy, Sean McLaughlin, at Options Sean on Twitter X. Today is Thursday, April 17, 2025. I hope you guys are doing well. Hope you're keeping your head about you in this wild market that continues to be wild. The S&P is up a little bit today. No big deal. I mean, being up, what is it? A quarter of a percent. I mean, it feels like it might as well just be flat compared to the ranges we've had over the last couple of weeks. So this is the jam session. What we do here is we review any action amongst trades in the All-Star Options service, any positions we may have exited for a profit or for a loss, any adjustments we may have made, any updates in any positions that need to be updated. We also update our stops. And we touch upon new trades that we've put on since we last spoke. But before we drop any charts here, let's share the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something from watching me follow my process. All right, so let's start with the VIX. The VIX has kind of been what's been grabbing the headlines as far as market action over the last few weeks. We had a big spike in VIX following the can we call it a tariff tantrum? I don't know. I'm just throwing that out there. Just came up with that right now. Maybe someone else is already using it, but can we call it a tariff tantrum? VIX spiked as high, touched 60 at one point a couple of weeks ago. We're way off of that high now. Still at very elevated levels. VIX, currently at 31. That is still a historically high level, but obviously way off the highs that we saw a couple weeks ago or early last week. But something worth paying attention to, with volatility being this high, it signals that there's still a lot of uncertainty in the market, which makes sense, right? I mean, businesses around the country, around the globe are all now scrambling to reevaluate how these tariffs or tariff threats will impact their bottom line. And you know what? Bottom lines affect the value of stock prices. And until we can get some rock certain, some dead certain clarity, a certainty on what the tariff picture means for the economy and for companies, then we can expect continued volatility to persist. But it is good to see it back below 30. I've got a couple circles here highlighted, and this touches upon a QQQ campaign that we'll be talking about here in a little bit. But this is kind of when we began the campaign, and it was a campaign that was betting on a mean reversion in VIX. We got that mean reversion, and this circle here was the level I was looking for. I was looking to see VIX come back below 30, at which point I would cease that campaign. But we'll talk about that in a second. I'll just bring up the SPY chart just to give a little further context. I've got some lines here. This level here showing what is typically referred to as a correction. This is 10% below the highs. This level here is 20% below the highs, which is typically associated with bear markets. We were briefly in bear market territory in the S&P intraday on 3 days, but never closed below it. But we are decidedly in between the correction and bear market phase. None of this means anything, but just want to give you a context of where we're at. And I've got this circle here highlighting, a lot of people have been making a lot about the death cross. If you're not familiar with what a death cross is, it's when the 50-period moving average, which is this blue line, crosses below the 200-period moving average, which is this black line. We got this cross early this week, and something to be mindful of. There's different schools of thought on what that means, but a lot of people think that when the 50-period moving average crosses below the 200-period moving average, then we've got further downside ahead. Let me just step off screen just for 1 sec. I have some music playing in the background that was getting a little loud. Okay, so that's the SPY. QQQ, similar story. We're in between the correction and bear market levels. Could we be set up for some sideways slop? I think so, potentially. But that's the high level. All right, so we don't have a whole lot of portfolio activity to talk about this week, but let's just go through it in no particular order. We have AEM. This is a position, we had the right idea, the wrong strategy. I mean, that's the bottom line. We were bullish on AEM. We got into a trade on January 22nd right here. We were bullish on AEM, and being bullish was the right idea. But unfortunately, we used the wrong strategy. I did a call diagonal spread where I was long the January 120 calls. Those are the calls I wanted to be long, but I wanted to finance the trade along the way because I thought it might take a little while for us to get there. And I had sold the March 95 calls against it to reduce my initial capital outlay. But as this stock rallied faster than I thought it would, we had to continually roll calls. We did it for credits, which was nice, but the stock moved too far, too fast. Ended up losing 290 on the whole campaign. We put a dot. We paid $1.40 on day one to get into the trade. We did 3 credits that brought in, lowered our cost basis, but it cost us 310 to close the whole trade out. I just threw in the towel right here. Once we crossed the 112.50 level, I threw in the towel, and I alerted everybody in the chat room that we did so. But we are now out of AEM. It's a bummer when you had the right idea, the right trade, or the right idea, but the wrong strategy, which is, the downside of options trading. We talk about how options give us options, right? There's lots of different ways to express a thesis. If someone's bullish a trade, somebody might be a buyer of calls. Another person might be a short seller of puts or a put spread. Another person might buy a bull call spread. Another person might do a ratio spread to express a bullish thesis. And all of those traders could be right, and all of them can make money, but not always. And in this case, we unfortunately picked a strategy that does not work. Paul, I see your question there in the chat. Is there anything special about VIX above 30? Let's go back to the VIX chart just real quick. There's nothing really all that special about VIX above 30, other than typically above 30, that is historically high. If I zoom out here a little bit, let's do a weekly chart of the VIX. So just to give us a little bit more time. And so I apologize, my charts are very slow, but you'll notice that, this is going back 5 years, and the upper bounds, which is right around here, is 30 to 35. Okay. We had a big spike here on August 5th, and we had the big spike recently, but going further out, you'll see that, 30, 35 is kind of the upper bounds for VIX in a normal market environment. And when VIX is above 30, that's when red alerts get sounded. There's no magic on that number. 30 is just a big round number that I like, but I generally want to see VIX below 30, because when the VIX is below 30, then the market tends to, in my opinion, kind of stick to the rules, right? When VIX is like in the high 20s, we consider that high volatility. That's a good time to be selling premium. When VIX is in the low teens, that's a great time to be buying premium. But if the VIX is above 30, that's when alarm bells are going off. And, just the simple betting on mean reversion isn't always the right play. It still can work, but usually means there's something structural at play. And we saw that now, right? Like we saw a total change in market character over the last few days, and that's why we saw VIX above 30. Okay, so we talked about AEM. Here's another trade that I'm bringing up here. Let me bring up the daily chart back again. We did an adjustment here in CCJ, and I want to talk about this one a little bit. So this is also a trade where we did a diagonal spread. I wanted to be long the January 2026 80 strike calls, but when we put this trade on back on October 16th, I thought that it might take a little time getting there. So I wanted to finance my purchase, lower my risk. So I sold some calls against it. I sold the December 65 calls against it. But in this case, CCJ is kind of the opposite of AEM, and AEM is not going our way. In fact, CCJ is going the opposite way. And we had a plan from day one, which we laid out in the blog post when we put the trade on, that whenever the short calls, whenever the premium in those calls got below 50 cents approximately, then we wanted to roll them out to the next month to bring in some additional credit. So on 1, 2, 3, 4 occasions, we've had an opportunity to roll the calls out for additional credit. And now we're sitting in January 65 calls against our January 80 calls. Okay, so we actually now this position has transitioned into a a bear call spread or a short vertical spread, right? We're short the 65 calls and long the 80 calls in the same monthly expiration. So this is a position we still have, I don't know, 7 months till expiration, 8 months, 9 months. Can't do math this quick in my head right now. So after all the adjustments we've made, our net credit in this position now is 77 cents. When we put the trade on day one, we paid 350 net debit, right? So after, 1, 2, 3, 4, 5 credits or 5 adjustments, we now have a net credit of 77 cents. Okay. You know what? I'm missing a circle. I just noticed this February 21st. Let me put it in here right now. We'll do this live. I forgot to add one here. So we'll just put it right there. Boom. So that was when our February 21st adjustment made. So here's where we're at now. We have a net credit, 77 cents. It's basically we're short a credit spread. We don't have a great price for that credit spread, but we're short the credit spread. And as long as CCJ closes below 65 in January, then we could potentially keep this credit. Now, I'm not going to let this thing sit until expiration. That's not my plan. Going forward, I've put in a good till cancel order to cover this short spread at 35 cents. That's a little less than half of my net credit right now. And if and when I get hit, I book a profit on a trade that's gone nothing but down more or less since I got in. We had a little bit of a rally, a couple days after we first got in, and then we had a pullback, and then we made new highs. But ever since December 6th, it's done nothing but go down. So if my good till cancel limit order gets hit to cover this spread at 35 cents, I will have made money on a trade that my thesis was wrong. Did not go the way. That's the opposite of AEM, right? AEM, we were bullish, but we just had the wrong trade. But the similar type trade actually worked in CCJ. So you win some, you lose some. But that's where we're at with CCJ. So I have a resting order now to close this at 35 cents if I can get it, which I'm feeling pretty good that I'm going to get it at some point soon, unless we get a monster rally. I mean, CCJ would have to basically double from here for us to lose money in this trade, which it could. It absolutely could. So we'll be mindful of that. Okay, last up, portfolio action, QQQ. So we talked about this in the Flow Show on Tuesday. I hope you guys watched it. So I'm not going to go too deep into this, but this was a campaign that I entered last Wednesday where I told everybody, I said, look, I think a turn is at hand. I'm not saying that this is the bottom. When I put this trade on the first trade on Wednesday, I wasn't declaring that the bottom was in. All I was declaring was that I think the bottom is near, and there's a lot of premium in options right now. We could sell really far out of the money put spreads, and I'm going to do it every day until VIX gets back below 30. Now, remember on that VIX chart I showed you, we got below 30 yesterday. So I am no longer adding QQQ spreads. We've done 4 of them. So we did one on Wednesday, Thursday, Friday, and Monday of this week. Out of those 4 spreads, 2 of them have closed at the profit target. Okay, great. We still have 2 on. One of them is we're profitable, and the other one is kind of at break even, I think, last I checked. But the highest strike on one of them is at 425. So guys, with the 2 remaining spreads that I have left, if the short put goes in the money on either one of them or both, I will close the spreads and book the loss. Probably a loss. It might not be a loss, but it'll probably be a loss. I'll book the loss and move on. Now, those losses will net against the profits we had on the other 2, and depending on how big those losses are, this still may be a profitable campaign. But if QQQ holds over here and doesn't get back below 425, that at some point in the next week or so, we should hit our profit targets and be out of all 4 spreads at a profit. Now, where does that leave us now? I mean, did we see the lows? Will these ultimately be proven to be the lows? I don't know. I'm still waiting to see a follow-through day, a classic follow-through day. If we see a day, either end of this week or early next week, where the indexes have a big increase, 1 to 2% or more on heavy volume, that would be an indication to me that at least for now, a new bull cycle has begun. Will it take us back to new all-time highs? I don't know. But a big follow-through day would convince me, more importantly, that this low here has some durability and will stick around for a while. All right, so that's all the activity of trades that we've closed or adjusted in the last week. We don't have any updated stops, guys. No stops to update this week. Look at this. My screen is black. That's neither good nor bad. It just means that, our positions still have a lot of work to do. They're all kind of chopping around in ranges. And until we get some follow through on the upside for some of our bullish trades and some follow through on the downside for some of our bearish trades, we don't really have anything to do on updated stops. So all the stops that exist in place now for positions, they're still active. All right, last up, we'll talk about the new trades, and we only have a couple, and really we've already talked about QQQ. We've done a couple of new trades. We did, since we last spoke on Thursday, I added a new spread on Friday. I added a new spread on Monday. By the way, details on all that, guys, can be found on the blog, allstarcharts.com. Head to the members section, head to the options section. You'll get all the updates on these QQQ trades, as well as every trade that we ever do in All-Star Option. You get a detailed trading plan of what we're doing, why we like to set up, how we're expressing our thesis, where we're going to stop out, where we may take profits, how we're sizing our positions. All of that stuff is laid out in every blog post for every trade. So I've already covered QQQ. The only other new trade outside of QQQ that we've done is LRCX. This is a trade we put on yesterday. I put on a bearish trade. I'm not impressed with this bounce. So this is a semiconductor name, Lam Research. It bounced like everything else, but I've not been impressed with how it's held outside of that big green day on Wednesday last week. This stock feels heavy to me. I think if the market shows any further weakness, this stock is very vulnerable. So I've put a bearish bet on here again. All the details can be found at allstarcharts.com. All right, guys. Well, we had no stops to update, so this is, guess is a little bit of a short one this week, but if you have any questions about anything I talked about that we didn't cover here on the show, shoot me an email, info@allstarcharts.com. That question will get routed to me. I'll be happy to answer you. Feel free, reach out anytime. You can also hit me on Twitter @OptionsSean. If you're not involved in All-Star Options and you're not getting our detailed trade plan, there's the link. The link is also in the chat. Subscribe to All-Star Options. You can click it there. That's nice and easy. Also, guys, if you don't know already, I have a free options newsletter I write almost every day, sharing my thoughts on broader market themes, doing some breakdowns on some trades that maybe have already finished and the lessons learned from that. We cover a wide range of topics that I think are interesting to options traders, and it's completely free. So if you're not signed up for my newsletter, please click the first link there in the chat. And lastly, if you like the charts that I share here, my friends at TrendSpider.com, TrendSpider provides those charts, and you can, if you like them and you want to try them out, you can use my promo code Sean50 to get a 50% discount on a TrendSpider subscription plan. That link also is in the chat, so go ahead and click that link. All right, everybody, thanks for tuning in. Keep hanging in there. Better times are ahead, I promise. I promise. Have a great weekend, and we'll talk again next week. Bye-bye.